Good morning, I'm Lauren Hayes for the Finance News Network. Stocks surged Tuesday as Wall Street built on a sharp rally seen in the previous session as bond yields continued to fall. The rally was broad-based with 97% of the S&P 500 up for the third time in 5 days. The Dow Jones Industrial Average rose 2.8%, the S&P 500 added 3.1%, and the Nasdaq was up 3.3%. All of the major averages are now each about 5% above their lows of the year. Tuesday's gains also put the S&P 500 up 5.3% for the week and is on track for its biggest two-day rally since March 2020. Markets have had a strong start to the month, bringing a respite from the swift decline seen in September and the prior quarter. The argument is that the S&P 500 looks oversold after falling more than 9% in September and extending its year-to-date decline to nearly 25% as of Friday's close. In addition, some of last week's selling pressure may have been driven by quarter-end rebalancing, which has now ended. Sentiment has improved these past two sessions as Treasury yields come off more than 10-year highs. The rally was broad-based with 97% of the S&P 500 up for the third time in 5 days. Sentiment on Tuesday also got a boost as shares of Credit Suisse traded 4% higher. Earlier in the week, there were concerns regarding the bank's financial health. The bank told CNBC it would provide updates to its strategy alongside its third quarter numbers. Stocks extended their advance following job openings data, pointing to a weakening in the labour market, leading some traders to bet the Fed could back off its aggressive tightening campaign sooner than expected. Across the sectors, energy was the star performer as the oil price rallied 3%. Within the sectors, best performing industries included social media, EV battery, gaming, investment banks and oil and gas stocks. In company news, Elon Musk has revived his bid for Twitter at the original offer price of $54.20 a share, potentially avoiding a courtroom fight over one of the most contentious acquisitions in recent history. The stocks closed up 22% as a result. In other tech news, the White House will restrict Chinese tech firms' access to some chips. In the coming days, the Biden administration is expected to announce new measures that would limit the ability of AI and supercomputing firms in China to access American high-tech equipment and software. On the economic front, a rush to secure natural gas is resulting in an acute shortage of seaborne vessels, forcing companies to pay record high rates to transport the fuel to Europe. Atlantic LNG freight rates have increased over 300% in 1 month as participants look to secure the last remaining vessels ahead. Iron ore is managing to steer a fairly straight course despite the headwinds and crosswinds being thrown about by both the Chinese and global economies. The spot price's stability has persisted in recent weeks despite perceptions that the state of the Chinese economy has shifted, varying from optimism amid expected stimulus measures from Beijing to pessimism over a problematic construction sector. On the currency front, the dollar index was down 1.4%, dropping for the 5th consecutive session. Sterling had a good day. One Australian dollar is buying 65.06 US cents. On the commodity front, gold jumped 1.9% and silver gained 2.5%. Copper rose 2.5% and oil jumped 3.2%. The SPI futures are pointing to another solid day, up 1.6%. I'm Lauren Hayes. Have a great day.